Doesn't it seem like every time you turn on the news, it's just chock full of good news as it pertains to our economy and real estate and everything else? I know. Listen, a question I get all the time is, are we in a recession? Are we headed for one? And if so, what's this going to do to the real estate market? So let's take a minute and get into that. Hi, everybody. James Clark, Broker Century 21 Alton Clark. Well, last month, the FOMC, or Federal Open Market Committee, met, and they raised the federal funds rate to 5%. If you remember, I shared with you that they put out predictions that we'd end the year at 5.1%, right? But I warned you that they were meeting 6 more times. Now, between you and me, I was hopeful that they maybe would wait a while before they'd raise rates again. No, they didn't wait. They met again this past month, and they raised rates yet again, this time a quarter point. Now we sit at 5.25. Now, to be clear, this is the federal funds rate, not mortgage rates, but they're all intertwined, right? The federal funds rate, in case you're curious, that is what directly impacts credit cards, lines of credit, savings accounts, cars, boats, you name it. Now, if you're considering or you're curious, the 30-year fixed rate is at 6.39, the 15-year rate is coming in at 5.75. Now, when I take a look at the snapshots, like 1 year versus 3 year, the 1 year doesn't look so bad. When you start to look at 3 years and where we are now, we're not moving in the right direction. But my hope is there's relief in the near future. The question is it going to be coming soon? So let's get into some of the particulars now as it pertains to residential real estate. In April 2023, nationally, the seasonally adjusted rate was 4.28 million in sales, with a median sales price of $388,800. Now, inventory remains tight at just 2.9 months supply nationwide. Also, we've noticed a decrease in home sales within all major U.S. regions, registering both month over month and year over year sales declines. A little concerning. Now, locally here in Central Florida, closed sales are down 27%, right? New listings are down 26%. The average sales price has dropped a little bit, and inventory sits at 1.86 months supply. It's crazy. Central Florida is starting to feel the squeeze. Now, we also serve areas like New Smyrna. So what does the coast look like here? Well, out on the coast, we see the pending sales, they're down 9%, right? Pending sales, are down 9%. It's closed sales that are down 4%. Still not good. Active inventory is up 105%. So there's more competition entering the market, right? Values are holding steady though. That's the good news that you guys need to take from this, okay? And that's throughout all of Central Florida. Now, one more area that we cover is Lake County, the villages Lake Marion, Citrus, and Sumter, okay? Bad news is those areas are generally down about 8%. Median sales prices dropped 1 to 2% when compared to last year. And guess what? Inventory in those areas is also up just under 100%, right at like 90%. So that's it for stats, but what about projections, right? Like rest of the year. Well, according to Fannie Mae, according to their May housing forecast, we're projected to be down 16.7% in new housing starts for the year nationwide. We're also going to be down 18.9% in single family home sales and down 14.3% in total home sales for 2023. Now, as you can see in the chart, there's a rebound in 2024 or a return to normalcy, but the 2023 outlook is trending in the wrong direction. Now, please know there's no crystal ball for this, right? All we can do is consistently monitor the situation and make sound decisions with the information we have at hand, right? That's really all any of us can do. Now, let's keep moving and stay on the residential real estate side of things. Let's shift though. Let's take a look at the luxury side, right? Both locally and nationally. Now, nationally, the median sales price dipped. Don't worry, just under 0.5 percentage point. Now, the good news here, locally, so Orlando proper, Central Florida, the average sales price of a luxury home actually rose 4%. Now, obviously, and it's always this way, luxury properties take longer to sell. And yeah, that time is increasing right now, nationally and locally. An interesting metric for everyone to watch is that here in Central Florida, inventory in the luxury market has risen 101%. That's gonna impact values and sales here in the near future. We just have to continue to watch it. Stay tuned for that. I'll let you know. Shifting gears now, let's discuss the commercial market. The 2023 outlook indicates quite a few challenges ahead. Retail is at a crossroads. The future of office space remains unclear, right? Why? We've got persisting supply chain issues, record inflation, remote work, all that stuff. So I took a look at NAR's Commercial Insights report, and I focused on vacancy in particular. The office sector is also experiencing challenges with remote work still being a thing. And we're seeing that play out with vacancy rates in this regard in this sector at record highs of 12.9%. Now, conversely, and this is something to note, the industrial section has shown strength with vacancy. They remain at record lows at 4.3%, and rent growth remains high at highs above 10%, with warehouse rent growth being above 11%. Now, the best sector is retail. They have had the lowest vacancy rates of all commercial sectors in 2023, which is directly connected to consumer spending staying high. We'll see how long that lasts. If you're looking to invest in commercial, retail will be the way to go, as all near and short-term projections say that that sector is going to remain robust. So retail is the way to go. Now, what about the financial front, right? Well, look, we all know geopolitical issues, record high inflation, right? Rising interest rates. They have all placed a real significant strain on the US economy, and we're in uncharted territory. As of the end of April 2023, inflation was at 4.95%, which is moving in the right direction, but it's not as fast as we'd like it to move. Now, please remember that the Federal Reserve has made it clear that they're going to continue to increase the federal funds rate until we hit 2% for inflation. So we'll see how that plays out. But future interest rates are a guarantee at this point, in my opinion. Now, another really good place to look with regards to the financial outlook of our economy would be GDP, right? Or gross domestic product. So I pulled some reports, and starting with the Congressional Budget Office, GDP grew 1.1% in the first quarter, with consumer spending remaining somewhat stable. However, there's lots of other predictions out there, right? Some predictions say that GDP will slow to 0.7% in 2023 and maybe even as far as 0.4% in 2024. Now, Fannie Mae has a little bit more optimistic forecast. They, however, also predict 2 consecutive quarters in 2023, Q3 and Q4, negative, ending the year at 1.7%. And guess what? Q1 in 2024 will also be down, giving us 3 consecutive quarters of negative GDP growth. That's not good, obviously. These are obviously ominous predictions that are worth our attention, and I promise you, I'll keep you in the loop as we progress, okay? One final component that we need to constantly pay attention to as well is unemployment. Here in the US, we sit at 3.4%, which is only a minor change compared to last month. And as you can see in the graphic, there hasn't been much of a change movement-wise in this regard over the last year. But the concerning thing about this is that there's multiple forecasts. I've seen many forecasts out there that say unemployment will actually rise to potentially 4.3% by the end of this year, with a further increase going into 2024. This is just another metric that we have to watch, because all of these things connected going in the wrong direction are obviously going to have significant impacts on the housing market and our overall economy. So look, I know a lot of that sounded kind of doom and gloomish, and I get it. But here's my personal opinion. There's never a bad time to buy, and there's never a bad time to sell. Now look, I get it. I'm a real estate broker. It sounds self-serving, but it's true. Now here's what I'll tell you. You gotta know what you're doing. You have to have a professional at your side. You've gotta know the numbers. You know the old cliches, you make your money when you buy, right? You make your money when you sell. It's true. Every deal is different. Every scenario is different. And the biggest thing that I'll tell you is to really look at this more holistically. Like, what is waiting a couple of years going to do to your wealth building strategy? Do you know that right now, and don't quote me on this, I'll put the numbers on the screen, I think the average wealth of a renter in the United States is at about $8,000. And the average wealth of a homeowner is at or above $300,000. Those figures are absolutely night and day. It's exponential. That's why it's never a bad time, to buy or sell, okay? It's definitely never a bad time to buy. It's all in how you buy. Now, it can be a bad time to sell if you don't have good timing. And I will tell you this, if you're even considering selling, do so now. Markets are holding steady, but with GDP and all these other components having bad outlooks in Q3 and Q4 and Q1 of next year, get out in front of this thing and get on the market today. And listen, ultimately, if you want to talk about your situation, where your values are, whether it's a good scenario for you, here's one thing I promise you. I will tell you the truth every single time. That's what we're here for. We're here to serve, and we would love the opportunity to serve you and or your family. Listen, thanks so much for taking your time to watch this. Depending upon where you're watching this, there are links down below where you can download the luxury housing market forecast, the commercial insights report, and also even some local luxury market insights reports and some local residential market reports for your respective areas. That way you can download them and have them for yourself, okay? Don't hesitate to reach out if you have any questions. And until next time, James Clark, broker, Century 21 Alton Clark. Thanks.